Welcome back everybody to the 10K to 100K challenge. Today we got a lot of interesting stuff in the charts. I'm gonna show you all the things that I'm looking at, all the significant kind of shifts that have been going on and the indications that I'm seeing that we are getting very close to a bottom. These are really good times to buy and why I'm honestly thinking about upping my DCA or even shifting my strategy a little bit. So let's get straight into it. So first, I want to start, and I always start this way, is by zooming out and looking at the big picture. So I've shown this many times before in the channel, and that's simply that Bitcoin has followed a 4-year cycle. Now, there's always some controversy with the 4-year cycle. Is it persisting? Is it not? Are the halvings not as important as the issuance goes down? Is the 4-year cycle just psychological, has no actual meaning to it or significance? All these things a lot of people throw around, but the way I view it personally is that it is the case that it's moving in 4-year cycles. So to have the perspective that it's not following that because of some significant news thing or some shift in fundamentals, I think it's fair, you can do that, but me personally, I'm not gonna, if it ain't broke, don't fix it. I'll say that time and time again, if it ain't broke, don't fix it. And simply put, Bitcoin moves in 4-year cycles, 4-year kind of phases, and it's in an uptrend. So we have on the long-term time frame, meaning from the start of Bitcoin's history to today, we've had the 4-year cycle and we've been in an uptrend. So I take that as the base layer of knowledge. So all the stuff that I then predict off of that, it comes from that basis that we're in a general uptrend and that's going to persist, and that the uptrend can be traded, which I'm not a trader, I'm an investor, so I don't really care about the fluctuations within that uptrend, but essentially with the uptrend, it can be traded using the 4-year cycle. And with this 4-year cycle, you essentially have better buying opportunities and worse buying opportunities. So there's periods of undervalue and there's periods of overvalue. So now that we've looked at the zoomed out and we kind of understand the general trend and the way it moves, now I'm looking at the more short term and what significant points in the short term are rearing their head, or what we typically see at very pivotal points. So when you're value investing, or when you're trying to hold for the long term and buy an asset that is valuable, whether it's gold, a certain stock, you essentially, if you're buying for the long term, you can always dollar cost average and just get an average price, which if it goes up, that's great. But if you want to get the most aggressive moves, meaning you want it at a significantly undervalued position so that when it moves to overvalued, you have a significant run, you essentially need to understand what you see at those undervalued areas. So it could be as simple as something like how it looks. So clearly with Bitcoin's history, there's periods where price hits a bottom, right? We have these areas. And then we clearly have price at the top. Now, if you could go back in time, it would be literally as simple as selling the top, buying the bottom, and you're increasing your value every step of the way, every 4-year cycle. But none of us have that. So projecting into the future, we never really know when the tops are, when the bottoms are. But what we can do is look at when it tops, what do we see? And when it bottoms, what do we see? So what I see and why this has significance and why I'm sharing it with you guys and why it pertains to my 10K to 100K challenge is when we have bottoms, typically, you can judge it by a couple of things. One is strictly timing. So if the 4-year cycles are consistent, then timing is one of the things you need to look at. but then we can also look at what the indicators are doing at the times of the bottom. So if we look back in history, all right, let me get rid of these. So we can look at the 200-week moving average, and what we see very clearly is that at the bottoms, it gets near, closer, under to the 200-week moving average. Same thing happens at this bottom, same thing happens at this bottom, and currently we're there, right? So strictly off two metrics, time, meaning strictly off the 4-year cycle pattern recognition, we can see that we're at or close to a bottom. And then based on the 200-week moving average, we have signs that when it touches or is below, that's our bottom signal. Same thing here, same thing here, same thing here, okay? Then we can add the Gaussian channel. This is another type of moving average. So we can see that when the Gaussian channel flips red and we have it below the Gaussian channel, we have our bottom area. Same thing happens here, flip red under the Gaussian channel, bottom area. Flip red under the Gaussian channel, bottom area. We have flipped red and we're below it. So we already have three things working in tandem to show us that the bottom signal is coming around or is here possibly. Now we have three indicators on the chart. One is time, one is the simple moving average, and one is the Gaussian channel. And then we can look at other indicators, things like sentiment, which is basically how people are feeling about the current market. And what we see is that at times, sorry, let me fix this. At times of overvalue, the greed is at a high, right? So people are very greedy. They're like, I want more, I want more, I want, Bitcoin's going up, it feels good. You're like, I want as much Bitcoin as possible. And then when price tends to be at a bottom, fear is at a significant high, meaning people are scared to get in the market. They're selling their coins because they're worried about, what's going to happen. Is it going to go lower? And this is essentially the psychological indicator of how people are behaving. So we can see that fear signals bottoms, not greed. People aren't seeing a discount on price and going, I want more, I want more. So fear is basically the indicator that a lot of people are scared. And if a lot of people are scared, that's when you should be greedy. That's when you should buy as much as possible, is because a lot of people don't understand this concept about investing, is that, and this is something I've had to learn over time and that I'm hopefully going to show through the process of this series, is that a lot of times your psychology is your worst enemy when it comes to investing. The best times to buy are when you are scared shitless. Okay, so a lot of times, and this has happened for me specifically with this series, is that I was up $300-400 just DCAing, and it felt good. Now I'm down $300-400, and I know that all these signals are firing, but I have a bit of reservation as to buying more or thinking of how I can get more. And that, to me, if I can step away from my own feelings and assess that, that's actually a good sign that things are undervalued, that it's a good buying position, okay? Now that we understand sentiment as well, so we have about 4 different indicators signaling a very clear bottom, we have another indicator. And this one, I want to give a disclaimer that I'm not as experienced in understanding this, and I'm still learning how exactly it operates and the mechanics of it, but I'm going to try and explain it the best to my ability. So this is the way I was taught it, or the way I kind of understand it, is that you can be at a certain speed, but then you only increase the speed with acceleration. So if you're in a car, you can be cruising, and if you don't have the gas on, you're just going to stay at that speed. Or like, let's say you're in space and you're moving, your velocity is going to stay the same, objects in motion stay in motion. So with that concept, RSI is like the acceleration indicator. So it shows you whether the market is speeding up or likely to slow down. And what we understand is that in previous bull markets, this one is probably the easiest example to show. Let me expand this. So when price is moving in a large upward fashion, we can see that the RSI, the relative strength, is at an all-time high, meaning everybody is accelerating their buys. They're buying more and more and more as it keeps running up. Now, once acceleration kicks off, what we can see is it's not a straight shot down in the same way that the RSI shoots down. It's more of a slow tapered fall off to the bottom. But what we can see is the moment that, and let me add some arrows so you can see, the moment that the RSI bottoms here, you can see it starts picking up, right? Meaning you're starting to initiate the gas. A lot of people are slowly starting to accelerate their buys. But what we don't have is that same acceleration in price. We have chopping sideways or sometimes even down. And this is what we call I didn't call it this. This is what people call, or what you would say is, a divergence. And what this typically means is that things and the momentum to the upside is picking back up, but price hasn't caught up with it. So then we can look at our 2022 bottom, and we can see here that RSI bottomed at around 25 and started to pick up, but the price relative to the RSI was actually still falling, meaning the accelerated momentum, people were stepping on the gas, but the price didn't catch up to it yet. And what we're seeing right now is the exact same thing. So we had a weekly close on the RSI where it bottomed around here, and we can see RSI is slowly pushing up. It's curving up. It found a higher low. So we have the RSI pushing up with the price moving down. So one of these things on its own is interesting and useful and can say that the bottom is near, but all of these things, all 5 of these things together, tell a very clear story. And my view is that none of this is guaranteed. None of these things are, fortune telling signals. They're not guaranteed. Nothing is guaranteed. But just looking at this and taking my emotions out of it, how I feel, and just looking at the data, there's very clear signs that the bottom is near. Things are getting close to reversing, and we might go into our next Fourier phase of the cycle. Now, if we go back to the first one, the time variable, then we could still see the bottom in October, or even all the way till the end of Q4, so December, maybe even into January. So that's not unlikely. This could keep trending sideways or down from here. That's a total possibility. But I thought it was very important to share this data with you guys, to share what I'm seeing, and hopefully you learned something from it. Now, as always, I show my actual portfolio where I'm at. I'm currently invested $6,500 into iBit. We're down around $357, and we still have $1,500 left in cash. I have around $2,000 in limit orders. So I'm actually more invested in the market than I have been previously. I still have my DCA set $250 a week, and I think I'm in a very good position. I still have cash to buy at lower prices, but I'm largely invested in the market when we're already at a 50% discount. So I'm excited for the next couple of years to see where things go. This challenge could take 5-10 years. If things go really well, it could take one cycle. So I'm excited to keep you guys updated, share it all with you. If you enjoyed this video, leave a like, subscribe. I have some affiliate links down below, like Wealthsimple and Trezor. If you want a cold storage, I would seriously suggest using Trezor. It's what I use. And then if you're looking for a brokerage, you're in Canada, I do use Wealthsimple, and it's genuinely my favorite bank. So if you want to support the channel, click either of those links. And I appreciate anybody watching. So thank you. Subscribe down below, and I will see you guys on the next one. Peace.